Hello and welcome to Business Incorporated live on Channels Television, where we'll be tracking the markets, the economy, and of course, see how all this affects your pocket. Here are the stories that set your agenda. Now, Cameroon sells dollar bonds amid rising demand for risky assets. Egypt to export 3.2 billion cubic feet of gas to Europe. And Liberia to attract $4.8 billion in mining and oil deals. Great to have you for this half-hour of show. I'm Will Evang. Let's get a check on the commodities market. We see oil prices edged up on Tuesday as massive winter storm hit crude production and affected refineries on the U.S. Gulf Coast. But the rise was curbed by a resumption in supply from Kazakhstan. Let's look at natural gas supply there. We see that down 4.38%. Price at $6.50, and we also see Brent crude there up 0.06% at $65.63 a barrel, and WTI crude up 0.15% at $60.72 a barrel. Let's look at metal space now, see how they're performing. We see that price hovering just shy, gold prices just hovering just shy of the $5,100 per ounce level that was breached yesterday for the first time, and uncertainty also around the U.S. President Donald Trump's policy making prompted investors to seek safety in the bullion. We see spot gold up 0.03% at $5,083.50 per ounce. Spot silver, however, is down in trading as we see it. It's down 2.57% at $112.53 per ounce. Platinum is also down. Palladium, we see that down 6.07%. Copper is also down 2.06%. And now we see gold prices have been hitting these historic highs this year, has been reaching over $5,100 per ounce. So we're seeing that big jump in annual gains since 1979. But definitely the markets we're tracking, and to help us unpack what's driving this rally and what it means for the global and Nigerian economy, we're joined by Rosemary Ahira. She's an analyst and financial derivatives company. Good afternoon, Rosemary. It's good to have you join us.
Good afternoon. Thank you for having me.
Rosemary, gold often moves inversely to the dollar and geopolitical tensions. Now, in 2026, we've seen prices jump nearly 29%. What's fueling this surge, and what impact is it having on global markets, Nigeria, and investment flows?
Well, I do agree with you. Gold does have an inverse relationship with the value of the dollar and even geopolitical tensions. So with respect to what has been fueling the increase in the price of gold, well, three major things. First, investors are losing confidence in the dollar. So the U.S., they are currently running large deficits. There are concerns about the independence of the U.S. Fed, and investors are also concerned that interest rates may go lower going forward. So that is prompting them to look for safe haven assets like gold to put their money in. And secondly, there is persistent or rising geopolitical tensions, tensions in Eastern Europe, Middle East tensions, the US-China rivalry. All these are making investors more cautious in protecting their wealth. And lastly, we also have central banks increasing their purchase of this safe haven asset. So they will have enough bullion to back up their currencies, essentially, especially during this time of rising global uncertainties.
So go ahead.
With respect to, come again?
Go ahead.
All right. With respect to the impact on the global economy, so if investors are becoming more interested in buying gold, that means they are not investing in stocks, they are not investing in new businesses and factories. That will affect global growth, essentially, to make investments more, the investment environment, the investment climate more uncertain. And this would also create more uncertainty in investment culture generally. So when we look at Nigeria, it affects us in three major ways. So first, it puts more pressure on the Naira. If gold continues to rally, we will see more FPI flights out of the country, and this puts our currency under pressure. Secondly, it will affect our import bill. If gold continues to rally, commodities that are priced in dollar, for instance, like imported foods, machineries, are going to become more expensive, and this is going to affect our import bill. And lastly, this is the opportunity. It gives us, it makes us want to focus more on our gold mining sector. Nigeria has gold deposits in states like Zamfara, Kebbi, and Oshu that they can explore and also take advantage of this opportunity in the global markets.
You mentioned the uncertainty around gold and other metals that we have in the markets. Banks like JP Morgan and Goldman Sachs have forecast that gold prices may hover around $4,500 and $5,000 per ounce this year. Should investors, or should we be expecting the rally to continue? And what does this trend mean for African gold exporters, such as South Africa and Ghana?
Simply put, investors should still expect the gold prices to remain elevated, essentially, but at a much slower and cautious pace. So we're not seeing gold prices decline anytime soon, because the factors that are driving the increase in gold prices are still very much prevalent, like central bank buying, loss of confidence in the US dollar, the de-dollarization of the global economy, and the rest like that. For gold prices to drop, we need to see maybe a major drop in global inflation, global interest rates staying elevated for longer, or a significant decline in geopolitical tensions. So when we look at African countries that produce gold in exportable quantities like Ghana or South Africa, this will essentially increase their FX revenues when they mine and ship gold abroad, and it will also help to create an expansion in their mining industry, so there will be creation of jobs and basically more economic activities in that sector, essentially.
But let's look at Nigeria's gold reserves now, which we know they're currently valued at about $1.8 billion, and that's roughly 5% of total external reserves. How can Nigeria as a country leverage its gold and other minerals that we have to attract investment, strengthen reserves particularly, and drive industrial growth, especially at this time where we have this rally?
Well, currently, Nigeria is sitting on a quiet, expanding economic cushion, like I would like to call it, because the value of Nigeria's gold reserve is basically expanding without us even producing anything new. So if Nigeria can expand the amount of gold in its reserve, especially through domestic production, it will really help in increasing the value of our reserves. Our balance sheet will be looking amazing, and to also help the country to be able to meet up its global financial obligations more easily. So to be able to leverage our mineral resources, the country needs to pay more attention towards that sector, because yes, we do produce gold, but most of it is informal, and there is a lot of smuggling in that sector. So if there could be more regulation, security, and policies targeted towards securing that economic initiative, it would really help to help Nigeria to diversify its economy, first of all, remove its dependence from oil essentially, and also gain more foreign reserve if we choose to export, and expand our external reserves, basically, if we choose to keep our gold. So, but for this to happen, like I said, we need more security.
Okay.
We need to pay more attention into that industry, and we need to go into value addition. So not just exporting raw gold, but also refining, and maybe even creation of jewelry, or just to add value to these raw material.
Okay, so what you're saying, ramp up production and value addition will help Nigeria to boost its gold reserves. Thank you so much, Rosemary Ehira, analyst with Financial Derivatives Company, for sharing your perspective on Business Incorporated.
Thank you.
And now let's move on to other stories making hits Egypt will export 3.2 billion cubic feet of gas to Europe under deals with Shell and Petronas. A recent LNG shipment from Idiko terminal was sent to Turkey. And now the exports aim to boost investments, increase production, and strengthen Egypt's role as a regional gas hub. Now, EGAS will start pumping the gas for liquefaction and shipment soon. Let's check in with Liberia. It expects $4.8 billion in investment from new mining and oil agreements with multinational companies. Now, deals with Evanol, Atlantic, and ArcelorMittal could bring $4 billion, while agreements with Total Energies and Oranto Petroleum add $800 million. That's what President Joseph Boakai said. Now, the investments aim to boost the country's mining, oil, and gas infrastructure in the sectors. Now, let's check in with South Africa. We see the rand is strengthened against the dollar, breaking below the 16 rand mark. And this is the first time since June 2022. On Monday, the rand traded at just $15,998 per dollar as a result of gaining 0.8% in gold, platinum, and other metals, which are the country's exports, and also started off on a greater note that Monday. Now, experts caution that this positive news for South Africa is due to the weaker dollar. I'll move on to Cameroon, which has issued a $750 million 5-year dollar bond, becoming the second African country in less than a week to tap international markets. And the bond was priced at a yield of 10.125%. The sale comes as investors show renewed appetite for higher-risk frontier market assets, helping countries raise funds more cheaply. And for comparison, Cameroon's last dollar bond in 2024, a 7-year note carried a yield of 10.75%, highlighting improved market conditions. Let's check in with the domestic equities market in Africa. We see trading at intraday for Nigeria, especially. We see the all-share index up 0.18% at intraday, still sitting at 165,815 points. Definitely want to get a backstory there to know what's driving it. Very quickly, we're checking with our analyst. Oluwatobi Adesonya, equity trader at Zcrest Securities Limited. Oluwatobi, it's good to have you on the show. Hi.
Good afternoon. Thank you for having me.
Oluwatobi, let's just have a quick one. What's driving sentiment at the NGF? Yesterday it closed flat, almost negative, but escaped that. But what's driving sentiments right now? Is it the earnings?
So we can say we are seeing improved investors' confidence. Apart from that, we are also seeing investors taking position, ahead of earnings releases, especially 2024 full-year financials, right? Even though we've been seeing some, and most companies are already in their closed period, having their board meetings. So we are seeing investors taking position ahead of especially fundamentally sound stocks, and those that would most likely declare dividend as well. And besides that, I mean, like you said, we have been seeing marginal gains. As of last time I checked, earlier, so the ASI is up 0.10%. So one thing to note is that most big names, large cap stocks, they are not the ones driving the market yet. So we are seeing a lot of penny stocks that are moving at the moment. So not enough talk of when those big names start moving. So we'll see the market, make a lot of gains.
So what's happening? What should we expect at the close of business today?
We expect the market to close up marginally, even though yesterday, it's closed up, but it looked like it was flat, but it's closed up by about 0.0030%. So today, we would most likely see gains, right? Because I think in your slide, it was around 0.18%. So now it's about 0.10%. So although it might be marginal, but we expect the market to still close in the green today.
Definitely bullish sentiments coming out of the NGF. We expect that green close. I'm looking forward to it. So Oluwatobi Adesonya, equity trader at Zcrest Securities Limited, for sharing your perspective.
Thank you so much for having me.
And let's look at other markets now. Still in Africa, South Africa, we see that GSI down 0.21% at intraday, 124,301, climbing still, but though lower today. Let's see Egypt's EGX30 at intraday, 0.13%, 47,567 points. And we see Kenya closing Monday in the red, 0.09%. However, 194.42 points, not a bad one. Let's look at Middle East markets and see how they performed at intraday. We see Dubai up 0.46%. We see Abu Dhabi also in the green, nearly 1% there, 10,364 points. Now see Saudi Arabia and Qatari indexes, how they traded, all in opposite directions. We see the Tadawul in Saudi Arabia up 0.7%, and we see Qatar index down 0.33%. That's a third of a percent. Now let's move to the U.S. now and see how they performed in pre-market Pre-market trading, S&P 500 futures ticked higher today after the major averages started the busy earnings week on a positive note. Now, investors are also waiting for the Federal Reserve's rate decision, which is due later this week. Let's see the Dow Jones futures down 0.19%, S&P futures up 0.24%, the Nasdaq futures up 0.58%. Now, in Asia, South Korean markets, we see that hitting fresh highs on Tuesday, even after President Trump threatened to increase tariffs on Asia's fourth largest economy. And Japan's Nikkei, we see that up 0.85%. That definitely sends green to the Asian markets. We see Kospi in South Korea. We see that jump to 2.73% at 5,084 points. And we see the Hang Seng in mainland China also up 1.35%. We see Shanghai also in mainland China up 0.18%, 4,139 points. And we see the Nifty 50 in India up 0.72%. We're going to check in what's happening in Europe, especially with the trade deal that was clinched with India. But first of all, Lars Alter in Berlin is going to be giving us how the market's reacting to these news. Lars, what's happening to markets in Europe now?
Yeah, well, I wish I could tell you there's a little bit more of a reaction, but markets in Europe all pretty flat, actually entirely flat, and not much action there at all, with the DAX in Frankfurt fighting for the 25,000 points, hanging in there just underneath that mark, but actually not really making an effort. I got to tell you the most interesting stock today, that would be Puma, one of the world's leading sportswear makers. Actually, that company was founded by one of two brothers, the other brother being the founder of Adidas, and thus more successful. Now, Puma is now announcing that China's Anta Sports is taking over a majority share in the company. Anta is the company behind Fila and Jack Wolfskin and other sports brands. For shareholders now, that is great news. Puma shares up 20% in early trading. They've come down since, but still up about 5%.
Definitely, that Puma, China almost looking now is going to be a takeover, or definitely now that they own about 29% of the company, we'll definitely be keeping track to see how that impacts markets going forward. But we see that trade deal with India, the EU signing that, you know, like the EU Chancellor called it the mother of all deals. This agreement for both sides, it's a big deal. How important is this agreement really?
Oh, it is huge, really. You said it absolutely correctly here. Both sides, as a matter of fact, EU Commission President Ursula von der Leyen and India's Trade Secretary Piyush Goyal, they both actually called it the mother of all trade deals. They call it historic. Well, the EU and India are home to around 2 billion people. They represent a fourth of global gross domestic product, and trade between the two regions already stands at 136 billion euros. That's the number for the previous year. Now, it's set to grow, of course, especially since the deal wipes out around 90% of all tariffs that have so far hindered entirely free trade. And, of course, some tariffs will remain in place. But, for example, with regards to cars, they will drop from 110% to only 10%. And that means for German automakers that they can take India finally seriously as a market. Currently, European cars only have a market share of around 4.5% there. And car makers here, one of Europe's most important industries, of course, they are hoping that they can drastically up that number, especially since other markets like China and the United States, of course, have become so difficult to work with.
So what else is in the deal that Europeans find very important?
Well, there's a broad variety of goods that no longer face any tariffs. It's machines and machine parts, it's airplane parts, chemicals, materials, plastics, also pharmaceuticals, very important sector as well. However, what's not part of the trade agreement is actually the agricultural sector. Farmers in Europe are already having a hard time with the EU-Mercosur deal, which in fact is still not in place now, pending another judicial review. It would have been similar for this deal, however, with India, and also the other way around, as you would imagine, as farmers in India are also a hugely important and influential group, and they had also been worrying about EU competition for their products. So beef, chicken, dairy, sugar, all that is not part of the deal. What is, however, another big part of the deal is to facilitate the immigration of Indian skilled workers to Europe. Employees from India are becoming increasingly important for the German labor market. there's currently around 170,000 here, and many in the scene and the sector here, they see potential for further expansion.
We definitely know that the EU has not been so happy with Donald Trump, especially with the Greenland conversation, especially from the World Economic Forum, where he spoke about that. And we also know that the U.S. is also in a deal with India. Is this going to be like a competition where countries or the bloc is going to be racing to sign a deal first? Is this what we're going to be seeing?
Certainly, because, you know, well, we're looking at a changed world for the last couple of weeks or months. China has been going wild with their market games. And then, of course, U.S. President Trump here, he has pretty much broken all the trade rules that we have relied on for so many years, and especially for the Western countries, especially for the EU. Trade relations and generally relations to the United States have been so important and also have been so solid and reliable for decades, and that is just no longer the case. So obviously it now becomes more and more important for the EU and for others to just forge new partnerships, whether that is with Mercosur. Again, South America, I said, itself facing judicial review, but also now India. It is important that we're looking out for new partnerships that we can do business with, because the world, as we have relied on it for years, for decades, that is no longer standing that way.
So we're not looking at China. Is the EU looking at China as a possible partner and going against the U.S.?
Well, certainly relationships with China will change too. I don't think we're looking at China as a potential partner right now, because there's been just so many trade difficulties in the past. You know, speaking of the uneven playing field that we've had for years, China playing with different rules. China is still first and foremost a huge competitor that we have to rein in, but obviously it's definitely true that the relationship, the trade relationship between the EU and China is as well changing as trade relationships around the world are changing in general.
Thank you so much, Lars Alter. It's always good to have your perspective. Lars Alter right there in Berlin. Thank you.
Thank you, Will.
So let's check in with other markets. Crypto. Today, lawmakers in Russia have advanced a controversial new bill that would give authorities the power to classify and seize cryptocurrency as a broader crypto regulation, you know, even as a broader crypto regulation is fully in place. Now, the move comes as the country continues to tighten control over digital assets and could reshape how crypto is treated in criminal and civil cases. Let's check in what's happening there. We see automatic pump tokens jump 25%, and crypto markets, we see that surging overnight, even as associated Launchpad Pump Fund and the Solana Foundation face a class action lawsuit alleging insider trading and questionable token launch practices. Now, what does this legal heat mean for platform? And it's definitely worth tracking how investors will be reacting to this amid ongoing meme coin market uncertainty. And see, up next, we see Shiba Inu's token burn rate surged by over 2,800%, with millions of shares removed from circulation. But despite the big numbers, the price barely moved. We'll break down why this burn spike, you know, much later is translated into buying pressure, or what does this mean for future of the meme coin. And that's a wrap on the show. I am Will Ibang. I'll see you tomorrow.